Hello family, this video I'm going to explain a full breakdown in a trade that I shared already in my YouTube channel in the last 3 weeks in Bitcoin. So first of all, in this video I'm going to expose the fakeness in this accumulation from A to Z. Anything you need to know, you will find it in this video. So let's get into the chart. So basically I was looking at the higher time frame. I saw that the market in Bitcoin was completely bullish. This give me a sign of I need to look for buy opportunities. And then I went for weekly time frame. I'm just giving you my full ideas. And then I was looking at this fair value gap, the last one. I don't look for this one or this one. I'm only looking for the recent one, this one. So let me move this one there, this one to start from 0, and yeah, I'm going to give it all to you and what is my thought process about that. So I was looking to that significant fair value gap, and then I wait for the market, because retails, whenever they say a fair value gap, they just like anticipate that the market will come into it and then run higher. Yeah, this is like what people think it's gonna happen. For example, after they see this fair value gap form, they wait for that rates to come, and then the next candle they expect to be something like that to give them TP with easy easy stupidity. So yeah, this is what people think. And then what my thought process about that is, I need the market to give them that hope, because the market is working like that. This is the market makers, okay? They wanna buy. They cannot just simply press a buy here, because the market will skyrocket to the moon, and yeah, this is bad. So what they did, they come into significant zone where people wanna buy, like this support for example, and then yeah, they tap into what, and then they give a shift in market structure. So most of people, they will see this is a support or resistance or wherever, and then they start buying, thinking that the market will do something like that, and then eventually the market break through all of this liquidity, and then yeah, run higher. So what we need to do in this scenario, we should wait for the market to take out all of these guys that they gonna put their stop loss somewhere in these zones, and then we're gonna run higher. So this is my thought process about that. So the same thing happening here. I was waiting for the market to come to touch that fair value gap right there. Perfect. I'm just gonna do something like that. Yeah, touch into that and then run higher. So the next week, which means this one, I was expecting the market to run through that low also, because the people, let me go to the daily time frame to see what I mean about that. Because when the price was here, none of this thing happened already. So yeah, the thing is, when the people, they will see this tap into that fair value gap, like I don't know what it's called, it doji or something like that, candle, yeah, and everyone will start thinking this is a market structure shift in lower time frame. Okay, well, we are going to the moon. And let me give you my secret stuff here. As you see, how I can confirm that low has a lot of liquidity. I confirm it simply by looking at the price when it touched the fair value gap. I need to see a clear rejection, and other things, I want to see the price fail to go to the short-term highs. Why is that significant? Because the entities that they will start chasing the price to go for buys here, buys here, buys here, buys here, they start putting their take profits here. Okay, and then above that high. So the majority of entities, they will start thinking, or also your retailers related, you will think like that. And then you start thinking, okay, I'm going to get a break even here or here. So they don't want you to think like that. They want you to keep holding this shit because they know they will like take you out after. So they will not give you that hope. You will be in and then you start like hoping for the best. So this is their plan. What I want to see the market is fail to get through that. This is the first confirmation. And also the second confirmation, you need to see clear rejection. So basically I'm confirmed 100% this is low. It's so significant, that low. It's so significant. And it has what I want. For this example here, that low. Why it's not liquid? Because we didn't touch the fair value gap. And the second thing is we didn't yet create a short-term high there. I'm looking at the candle, significant candle. Like if I am looking at daily, I will stick to the daily as market structure, as liquidity sweep. I am not changing the time frames because the algorithm, if it building something in daily, it need to be running the daily. Don't tell me in 5 minutes or 3 minutes. I don't believe this kind of stuff. So what you need to wait is for that short-term high to not be taken. Because if it be taken like that, it should be like something like that. You don't want to stay when the market is collapsing. So yeah, you need to stick to those rules to confirm this law has liquidity. And the second thing, now we are in inter protocol. Let's just go there and then understand what's happened there. Let's go to 4 hour. In 4H, what we have here, look how rates will get trapped to put more buyers. Look at the market maker, what they did. They go higher, they create this fair value gap here, fair value gap here, keep chasing. People start chasing to buy. Market structure here, market structure here, market structure here, wherever. But in the daily time frame, as long as this is a daily fair value gap, so you don't want any confirmation. You need a market structure in the daily, which is this one, not this one. So most of people, they will get trapped into that, and then they will keep buy. Look, you will buy from that order block. Nice to meet you. You will buy again from that fair value gap. Nice to meet you too. And then you buy from that order block. Nice to meet you too. And then the market eventually run through all of your stop losses because they know now, after trapping this guy, trapping every buyer, every potential buyer being trapped. And then yeah, now it's time to come, boom, run all of them. And then yeah, now the smart money accumulates all of that position. I mentioned a video because this candle was a China bad news coming. I mentioned that these Chinese people, they just publish this news to buy, and then you should start buying Bitcoin. I mentioned that in that candle, specific candle. I said you need to wait for market structure and then run higher. I didn't give you the source right there in that video. I'm just giving you idea. Okay, but today I'm going to give you everything you need. So, and then yeah, the market, as you see, it ran lower. How can you now know is this is a liquidity sweep? This is a real liquidity sweep. Perfect. Let me just, no, I don't like this color. This one is better. So how can I now confirm this is liquidity sweep? I am not confirming it like just by candles. No, I'm going to the source, going to the daily time frame. What daily time frame tell me? Now after we sweep that liquidity, we create that candlestick because the inducement is being created in the daily. So I am waiting for the market structure shift in the daily. I am not gonna wait for 4 hours, 1 hour. No, even if it's logic, but no, I will stick for the sauce. This is the sauce. This is where the real money being trapped. So I'm looking at the daily time frame. I got the first market structure right there when that candle closed. So this is the first confirmation. You can start looking for buys. This is also, I mentioned another video not to start buy. And the second thing, I will look for that candle that create fair value gap, I need the candle to close above it. This is a real market structure shift, and that one also is a real market structure shift. But for my like properties, I'm using this one. I'm not using this one. Okay, let me tell you why. Because the market can easily come and fill that fair value gap and then run lower. But as you see here, it can easily induce another sellers like it did here, and then it can just sweep them and then run lower, and maybe I will trap there in a path. So basically what I am doing, I need the market to just touch that fair value gap and ignore it like this cut, and then this is where I got the market structure shift. So perfect there. And then the next day, which is Friday, I'm looking for 4 hour. Now I got my stuff right there confirmed. So after that Tuesday candle close, we will wait for Friday, which is this one 8, to come to retest, and then we can start taking buys. So what we will consider is that fair value gap high that we already choose as market structure shift, and then the next thing we will use that inversion fair value gap. Now the thing now starts making a sense for you, and in that that Friday day, I will look for market structure shift in the lower time frame, and then I can say I am in good hands, because maybe that day it could be just liquidity sweep above that recent high, and then we should go more lower. So what basically I'm doing here is just to confirm more confirmation, to get in with like more clarity or something like that, or you want to call it. So I wait for the market to come to test that low and then run higher, and then it's in some kind of sessions like New York. That one, that's perfect. Now we are in Friday. That one in Friday, which means the daily candle already closed there, and then they create that short-term low, and then they sweep it in New York. So that low right there, it's created by London, and then New York sweep that low, and then the thing is you should wait for the market structure shift. The market structure shift right there is gonna happen, and then you're gonna stick into that. Let me just change the time frame to make it easy, and then here we are. As you see here, the market create that liquidity, tap in like 3 times, tap in there, create liquidity, and then in New York time, in my favorite time between 10 and 11, we run lower to sweep that low being generated, a lot of liquidity being generated there. This is the London low, and then we sweep it in very significant time between 10 and 11 in New York time. This is New York time, by the way. And then we need to see the market structure shift. That one. This is not a market structure shift. Okay? The market could be run like that and then like that. No. Because why I'm considering that guy is that high is the market structure shift, because a guy has already short taken that liquidity, short billions of dollars to run that low. So until that guy being taken out, there is nothing happen. It's just like fighting each other. You don't want to stick into that fight. So I'm considering that guy is a shift in market structure. Did we get it? Yes, we get in the next day in the New York session, and this is my confirmation, as we are in good hands. And now, what I will like to do, I'm going to take that area right there, and then when the price come there, I'm going to take a buy. I'm not gonna put my stop loss like that. No, because this is a higher time frame idea. I'm going to look for what? Wait, for the daily. Please don't get confused, because some of people, they will see this is okay, this market structure shift, I'm going to and put sell stop loss like that, targeting to the moon. Nope, I am not doing like that. I'm going to the daily time frame because my bias in the daily time frame. I am not gonna change that. So as you see here, what is the last down close candle before where we are? This one, and that fair value gap right there. So my stop loss, because this is where people got induced to sell. So no matter what's happened, the market will not come into that candle. It can come and tap into it and then run higher, but it cannot come below it like that, because a lot of people being trapped there to sell. So I am not gonna put my stop loss anything like that. So I put my stop loss around of that candle low, and then I target to RR. Perfect. This is what I told you. I told you need to target around of 125. I told you in the video, and yeah, and the next target was 130, but it didn't hit it. It just hit one around of 125. This is to RR trade. This is how I am reading the market. I am like not going to go for lower time frame to hit my mind, because let me just be honest with you. Okay, if you are now a short term trader, or whatever you want to call yourself, it doesn't matter, and then you go, let's just say if you are short term trader, you will be out, my friend, you will be out. Okay, now you gonna see, okay, this is fair value gap, and then you out, and then again order block, hoping for the best, market structure shift, out. Again, you will see sweep of liquidity, market structures, out. And then you will see, oh, okay, maybe the market sweep liquidity right now, and then it went lower. Again, sweep liquidity, you start selling, the market run higher. Again, we see this is market structure, run higher. And then you start selling, and then the market run higher again. And then you will see, okay, this is reversal, this is market structure shift, and then you start selling again, the market went higher more. And then you will see, okay, this is market structure shift there, and then you start buying out, sorry, and then you start believing again the structure, you start buying, you are out again. Look how many times you are out. Look how many times. You cannot win. It's impossible to win until you start using the logic. The logic is very simple, because the market, I want you to repeat this video to understand what I'm talking about. The market is always need to put people in the market, and then take them out, and then eventually run to their objective, because these market makers are not dummy. Like for example, this here, this accumulation and then run lower. If you pay attention, what's happening here is the market just creating some kind of trend line there. A lot of people, they will see this as a order block, or wherever where the market, or support resistance, or wherever this resistance, the market just broke that trend line, and then most of people, they will say like that, or choose that order block, imbalance, or wherever, and then the market eventually just take all of them. And then who is buying right now? No one. Which means what? The market maker are buying. You see what I mean? Because most of people, they got involved there with the Fed tweet or news or whatever, and then most of people now, they are out eventually after resisting that resistance. Now they have a bad sign, and then now the institutions are buying. If you wait to the market structure shift, you can get an easy to RR, because everyone is already out, which means the market has no reason to go lower more. Now it need to go higher, because other will see what this is a market structure shift. Let's sell this stuff here. Let's sell this order block. Let's sell this one. Just hoping for the best. So yeah. So your primary concern right there is you need to follow this thing that I'm going to tell you. Just quick recap. You find out fair value gap that's being loved by people. Then you will wait for the market to come, test it out, and then little bit run higher, and then went lower because those people that they already bought there, now they are out. You will wait for market structure, and then yeah, run to the moon. And the short side, short example, you're gonna wait for fair value gap there, and then the market come, tap into that. Not want to give you target, no, needed to just little bit like that, take them out, market structure shift there, anything, and then yeah, retest right lower. If you want me to do a full video about market structure shift, the real market structure shift, you just need to put it in the comment section. Yeah, and I will do a full video about that. And also you need to pay attention to these highs. This high should be in New York session. Like 90% of trade that I'm talking is that high should be in New York session, because the majority of big moves happening at that time, which means the US like whales around the world. Let's put it this way: these guys, if they are not in a position, they need to be at the top of the pyramid. So yeah, these guys need to be sitting around of this price, always above the high. Even if it's happening sometime in London, it's like probably not even 50% of the time. It just 30% or 20% of the time this high happening in London. So I am not considering anything like that in London. So yeah, like in euro and geo, I am considering that. But other currency, even Bitcoin, Ethereum, nothing like that, I'm considering all in New York time. So yeah, you need to ask me anything you find some terrible explanation about it in the comment. If you don't understand any point, you just put it in the description. And also you need to follow like the rules that I'm giving you here. And the last thing, you need to subscribe to my channel, because the next video in the market structure shift will be very helpful, and maybe this is the thing that you are missing. So yeah, subscribe to channel, yeah, and activate that alert, or I don't know what they call it. So yeah, see you in the next video.